For 60 years, if you were an investor, you had a North Star, and that North Star was Warren Buffett. His leadership at Berkshire Hathaway was absolutely legendary. But now, that era is coming to a close, leaving behind a massive legacy and some even bigger questions. So how'd he do it? And more importantly, what happens now?
Okay, just take a look at this number for a second. Let it sink in. 5.5 million%. That is the honest-to-goodness overall return Berkshire Hathaway delivered under Warren Buffett. It's a number so big it almost doesn't feel real, right?
Which leads to the obvious question. How on earth is a return like that even possible? I mean, how did a failing, completely unremarkable textile company from the 1960s turn into one of the greatest wealth creation machines in the history of the world? So here's how you get to that crazy number. And the key wasn't some single spectacular year. It was just sustained, relentless brilliance. From 64 all the way to 2024, Berkshire pulled in a compounded annual gain of almost 20%. That's nearly double what the S&P 500 did. And they did it year after year for 6 straight decades. That is the engine behind it. And to really wrap your head around that, just imagine this. It's the mid-60s, and you buy one share of this little textile company for 19 bucks. If you just held on to it, that one share would be worth over $750,000 today. It's a story of wealth creation that is just completely unparalleled. So what was the secret sauce? How did Buffett and his legendary partner Charlie Munger pull this off? Well, it wasn't day trading, and it wasn't chasing the latest fad. Their strategy was built on a blueprint that was, remarkably simple but incredibly powerful. So here's the formula, just 3 basic steps. First, they used their insurance businesses. See, they'd collect all these premiums from customers and could invest that money, the float, before having to pay out any claims. It was basically low-cost capital. Second, they took that capital and bought great businesses. We're talking durable companies with cash flows that just wouldn't quit, like Coca-Cola and American Express. And third, maybe the most crucial step of all, they waited. They let time work its magic, allowing that value to compound for decade after decade.
But if the formula was so simple, why hasn't anyone else done it? Well, this quote from Bill Stone really nails it. It wasn't just about the strategy. It was about the unique partnership of Buffett and Munger. That duo, their intellect, their patience, their whole vibe, that's something the market might not see again for a very, very long time.
And after that incredible run, the torch is now being passed. Now look, this isn't a surprise to anyone. This has been the slowest moving transition in corporate history, decades in the making, as Buffett gets ready to hand the CEO reins over to his successor, Greg Abel. In Buffett's own words, he's going quiet. That means we're going to see a lot less of him in the public eye. He's stepping back from the day-to-day. But, and this is a really big but, he's not disappearing. He's staying on as chairman of the board, sort of the cultural anchor for the company that he built from the ground up. So let's break it down. What's actually changing and what's staying the same? Okay, Greg Abel is the new CEO, and he'll be the one writing those famous annual letters that were basically required reading for anyone on Wall Street. But Buffett is still the chairman, he'll still write a message around Thanksgiving, and most importantly, the core investing culture, that patient, long-term, decisive philosophy is expected to stay exactly where it is. And that culture is just so unique because Buffett always rejected Wall Street norms. He never split the stock, which encouraged people to be long-term owners, not short-term gamblers. He flat out refused to give earnings guidance. He gave his managers tons of freedom to run their businesses, but he kept all the big capital decisions right there in Omaha. That was the secret. All of this leads to the one big question that everyone's asking. What happens now? With the investing world's North Star finally starting to dim, what does the future actually hold for Berkshire Hathaway and for the millions of investors who followed its every move? Well, the new leadership team inherits this, a record cash pile of over $381 billion. Now, this number tells 2 different stories at once. On one hand, it's an incredible amount of financial firepower. But on the other, it's a huge sign of Buffett's recent caution in a market he thought was pretty expensive. And you can see that caution pretty clearly in their actions. For 3 straight years, that's 12 quarters in a row, Berkshire has sold more stocks than it bought. That's a rare and really sustained retreat for them, and it highlights the central challenge for the new team, finding good places to invest at Berkshire's gigantic scale. Which brings us to what is maybe the most unsettled piece of this whole succession plan. What happens to the stock portfolio? We're talking about a $300 billion portfolio of public stocks, and there is no obvious successor who has a track record anything like Buffett's. It leaves a massive question mark over who will be making those huge bets in the future.
This quote from another legendary investor, Seth Klarman, I think it really captures the moment perfectly. He says, "The world of investing will be different." And that's exactly right. This isn't just a leadership change at one company. It really is the end of an era for the entire market. Buffett wasn't just a CEO. For so many people, he was a teacher and a steadying voice.
So what was Buffett's final message to his shareholders? Well, in his classic, plain-spoken style, he warned them that the stock price is going to be volatile, that it might even fall 50%, something it's done 3 times before. But his ultimate message was one of deep, long-term optimism. "Don't despair," he wrote, "America will come back and so will Berkshire shares." It's just a fitting final piece of wisdom from the Oracle of Omaha.